Every once in a while, a story pops up that sounds like it's straight out of a sci-fi movie, but it's 100% real. This is one of those stories. It's about how the world's biggest digital asset just, poof, vanished, at least for a moment. So today, we're going to unpack the absolutely unbelievable story of Bitcoin's $0 crash.
I mean, really think about that. Just for a second. An asset that's been worth trillions of dollars, suddenly showing a price of zero. Zilch! It's the ultimate nightmare for any investor, right? But for the rest of us, it's an absolutely fascinating puzzle.
And that's the kicker. This isn't some theoretical what-if scenario. It actually happened. For one brief, incredibly chaotic moment, a glitch in the system made it look like Bitcoin was worth absolutely nothing. So let's dive in and figure out what on earth went wrong. Okay, so first up, we're going to look at the incident itself, that moment when a bug in the code basically created a financial black hole on a decentralized exchange called Paradex. So how does something this wild even happen? Was it some sophisticated hack, a massive market panic? Well, the truth is actually way more ordinary, but its effects were, well, anything but. Let's get into the anatomy of this glitch. First, just a little context so we're all on the same page. Paradex is what's known as a DEX, a decentralized exchange. Now, unlike the New York Stock Exchange, there's no big company in the middle calling the shots. It's basically just software that lets people trade directly with each other. And trust me, that detail is going to be super important in a minute. So the culprit? It wasn't some huge, dramatic market event. Nope. It was a simple internal tech error. It happened during a routine database update. The kind of boring maintenance that happens all the time behind the scenes of every app you use. Only this time, something went very, very wrong. Now, what's really amazing here is just how fast the team responded. I mean, look at this timeline. At 12:36 a.m., the first alarms start ringing on social media. By 2 a.m., the team had already pinpointed the problem. And, get this, by 5:16 a.m., they were already telling users their funds were safe. It was this incredible race against the clock in the middle of the night. But even in that super short window, the damage was just immense. That $0 price click set off this chain reaction of automated trades and liquidations. The stakes were unbelievably high. In just 24 hours, over $875 million in positions were just wiped out across the whole market. 234 million of that was from Bitcoin trades alone. Okay, so you've got this multi-million-dollar disaster on your hands, all thanks to a tiny software bug. How in the world do you fix it? Well, in the world of blockchain, you can do something that sounds like it's straight out of a science fiction movie. You can literally turn back time. The solution is called a chain rollback. And honestly, the best way to think about it is like reloading a previous save file in a video game. The developers can find the last moment everything was working perfectly, right before the glitch, and just restore the entire system to that exact point in time. It effectively erases the mistake and everything that happened because of it. And this slide basically shows you their playbook. Step 1, they figured out the database migration was the problem. Step 2, they hit the rewind button, rolling everything back to the last known good block. Step 3, they canceled all the crazy wrong orders that the glitch created. And finally, step 4, everyone's accounts were put back exactly the way they were before the chaos started. Pretty neat, right? So the story of Paradex is this incredible case study in technical failure and, thankfully, recovery. But seeing that big, fat zero on the screen, even for a moment, it really touches on a much deeper fear for any investor. It forces all of us to ask a much bigger, more fundamental question about Bitcoin itself. Right. We now know a bug can create the illusion of a worthless Bitcoin, but that illusion taps into a very real debate. Could the actual global market value of Bitcoin ever really, truly go to zero for good? Is that even in the realm of possibility, or is there something fundamental that props its value up? Well, if you ask the skeptics, the answer is a loud and clear yes, it could. You've got well-known investors out there who've called it a digital pyramid scheme. You've even got economists at the European Central Bank who've argued that its fair value is actually zero. To them, the whole thing is just a house of cards, waiting for a strong gust of wind. But then you have the other side of the argument. And this side believes that Bitcoin has these powerful, built-in defenses, a kind of financial firewall that makes a true $0 price almost impossible. And it really all starts with the true believers. As Michael Novogratz puts it here, there's this core group of people, early adopters, developers, who see Bitcoin as more than just an investment. For them, it's a mission. It's about building a better, more open financial system. These are the people who will probably never sell, no matter what. They are the bedrock.
So this resilience, this firewall, is really built on three main pillars. First, you have those ideological believers we just mentioned. Then, layered on top of that, you have massive institutional adoption. We're talking the biggest names in finance pouring billions in. And finally, you have growing government acceptance, where countries are starting to treat Bitcoin not as some fringe curiosity, but as a real strategic asset.
And look, this isn't just theory. As you can see here, we're talking about BlackRock, the world's largest asset manager, holding around 800,000 Bitcoin. You've got the Abu Dhabi Wealth Fund putting in over $500 million. Heck, even the Michigan Pension Fund is buying in. And when a bank like JP Morgan says, yeah, we'll accept your Bitcoin as collateral for a loan, that sends a huge signal. But maybe the most powerful pillar of all is government validation. I mean, the fact that the US government has created something called a strategic Bitcoin reserve, that just fundamentally changes the game. Comparing it to a digital Fort Knox isn't just clever marketing. It frames Bitcoin as a national asset, something you hold and protect for the long haul. So, let's bring it all home. We've got this wild story of a shocking technical glitch on one side and the much larger reality of a global financial asset on the other. How do we make sense of these two things together? Well, it's really a story of two different things. On one hand, the Paradex mess shows the technical fragility of the systems we build. A single bug on one platform can absolutely cause temporary localized chaos. But on the other hand, the wider Bitcoin ecosystem shows this deep systemic resilience. It's built on a global web of believers, giant institutions, and now even governments, who together provide this incredibly powerful price floor that makes a total collapse really, really unlikely. Which kind of leaves us with one last massive question to chew on. This whole story about a $0 glitch, it really forces us to ask, in this new world of digital money, where does value actually come from? Is it from perfect, flawless code? Or does it come from the shared belief of millions of people, powerful institutions, and even entire countries? The answer to that is probably going to define the future of finance.